You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody, that rockin' bit of tunage means it is time to rock out once again with everyone's favorite bi-weekly source for all things options related. Yup, it's time for the old OB, a.k.a. the Option Block, a.k.a. the show that kicks off our broadcast week here on the old Options Insider Radio Network. Remember, if you like what you hear for this program, for the network, wherever you get all of our content, maybe this direct feed just for this show, maybe it's for the entire network, maybe it's on Spotify or YouTube or Apple Podcasts, wherever you get our show, make sure you keep those reviews coming so new folks can continue to discover and indeed enjoy and indeed benefit from the network, more important than ever in these troubled times. So wherever you listen, make sure you keep those reviews coming. Keep those questions and comments coming too. We do love to hear from you guys. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, in the aforementioned network. And because we're kicking off our week here with the old OB on Monday, we like to mix it up a little bit, shake it up a little bit, get the blood pumping, get the juices flowing, and also make our co-hosts here dance through some hoops for a little bit, just for fun. So we're going to kick it off, as we have been doing for the last month or so, with a fun theme song from the 80s. Let's see what we have queued up here for our listening pleasure today. Be warned, it is probably going to be an earworm like all the rest of them out there. I can listen to that the whole show, but just want to get the juices flowing a little bit harder this week, because you'll notice it didn't say the name of the show in the intro. We made them easy to begin with, but now we're going deeper, going darker, going a little bit more high speed, shall we say, to throw a little bit of a clue out there. I do believe I went to the Rock Lobster last time and he got it wrong, and Uncle Mike got it right. So you know what? It's his turn again anyway, and he got it right, so he gets a bonus. Why not? So Uncle Mike TOSAW from St. Charles Wealth Management, A, welcome back to the program on this not at all Uncle Mike Day, and B, what is your guess for that fine program, sir?
I got to be honest, I don't know that one, but I'm going to take a guess, and I'm going to say Airwolf.
Wow, interesting. You know what? We don't need another guess. You are correct, sir. Yes. How did you guess that? Wow, I'm impressed.
I really thought that all right, what would Longo be playing? I tried to go inside of your head and think of something that you might like that I might not be super familiar with, and that's where I came up with that.
You'd be careful going inside my head, sir. It's a dark place. But you get bonus points. Wow, Airwolf, that was a good pull. That was a little bit of a back catalog selection. Yet another reason why the 80s were one of the best decades for shows and movies and games. Because even back then, TV shows, they had theme songs. They don't even have those anymore. They go right into the show. They have a little bit of a blip, and that's it. They can't bother to waste time setting up the theme of the universe. But back then, everything did. And they were all awesome, including Airwolf. So, Mr. Rock Lobster, a.k.a. Andrew GIOVINAZZI, once again, you don't get to guess. I have a feeling you probably wouldn't have guessed that one anyway. But A, welcome back to the program. B, were you at all familiar with that fantastic show known as Airwolf, sir?
I have to say, I don't think I ever saw one episode of Airwolf. I don't think I did. It's not. I was guessing Knight Rider, to be honest. It sounded kind of Knight Rider.
We already did Knight Rider.
Oh, we did.
I'm not going to give you the same one. We did the A-Team as well, so we have done a couple of those staples. Knight Rider, or I should say Airwolf, similar category to Knight Rider in that it was a very advanced vehicle. This time it was an attack helicopter that hid inside a volcano. If that's not the most 80s thing on the planet, I don't know what is. So with that beautiful airworm all stuck in our heads, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, the portion of the show where we break down what the heck is trading. I just thought of a bonus victory present for our little guessing games. They get to go first for all of our segments out here for the rest of the show. And Uncle Mike certainly earned it with that pull out of his back pocket, to say the least. But let's set the table here. What's lighting up our tape? I joked at the top of the show, it was not an Uncle Mike day, and it is not. It is blood red out there to kick off the week. So we're extending this period now of a little bit of a sell-off. I do believe at the end of last week, it was the first time in about a year that the markets had 3 successive weeks of down, effective closing down on the week. So interesting period we find ourselves in now, coming off the heels of another interesting weekend. We said it before many times on the show. There is quite literal weekend risk out there these days, and has been for quite some time. You don't really need this past weekend to drive it home, but in case you've missed that lesson for a while now, yeah, we do have weekend risk. Things happen. Supreme Court justices die. Pandemic news gets worse. All sorts of things happen. So if you're putting on crazy short premium trades and going to try to harvest and leaving them on for a couple extra cents through the weekend, if you haven't learned by now, maybe you shouldn't do that. I don't know what it's going to take, because coming into today's show, we're seeing lots of red on the screen again. Dow off nearly 3%, off 800 plus handles. People like quoting point totals in the Dow. I get it. It sounds cool. So we'll do it too. 800 plus points in the Dow. S&P 2.33%. NASDAQ off, rarely the laggard today. Usually it's leading the charge to the dark side. Today it is the laggard of the bunch, only off a mere 1.4%. We're actually seeing some of the exacerbation in terms of vol coming in a little bit. We saw VIX was threatening 30 not too long ago, right before the show. Now it's almost a little bit shy of 29, about 28.8 when we kicked off the show. That still puts it up about a handle from last show, but a little bit quieter than it was earlier in the sell-off. VVIX, a.k.a. the vol of vol, was at about a 111 and change. That puts it up about 7 handles. So remember I said on our last show on vol views, we broke 100. That happens very rarely during this pandemic. It happened once before. That was back in February 20th. So once we broke 100 to the downside, I used to say 75. In the pandemic, I think the new baseline for the downside is 100, certainly 95 at the very lowest. So once we hit 99 and change past week, I thought something probably was afoot, hence my vol prognostication on the crystal ball. And VXX at about 25.6, up almost a full point. It was up a full point. Now it's given up a little bit of that as well, up about 0.8 out there. What's driving all this? Well, of course, more sellers than buyers. That's the summation of it all. But people are getting spooked. Some renewed concerns about what's going on over there in Europe with regards to the pandemic, potential additional lockdowns there for London and Madrid and other areas of the European Union over there. Of course, you also have the death of the Supreme Court justice highlighting some of the political divide here in the U.S. and a lot of other fun things. And of course, the financials getting hit as well because of some pretty salacious money laundering allegations floating around out there. So a lot of things combining to drive us to the dark side out there today. And when it's getting dark out there, you know who I turn to. And today I have to as well, because he won our guessing game in such dramatic fashion. Mr. Uncle Mike a.k.a. Stringfellow Hawk himself, a.k.a. the captain of the Airwolf. Mr. Uncle Mike, sir, what do you have in store for us, sir? I'm going to send you an Airwolf t-shirt if I can find one, sir.
Yeah, that was a show. I never got into it. It was, I guess there's too many other great shows in the 80s.
You're too busy watching Knight Rider. This was like Knight Rider in the sky.
Pretty much. I mean, the concept of it's great, but that was an honest guess. I did not cheat. I just tried to think what Mark Longo would do. It didn't sound like a comedy theme, and I was just trying to think what would Longo think, and that's where I came up with it.
Let it percolate before you go on. I was going to say it one more time. An attack helicopter inside a volcano. There, let it percolate for a little bit, sir. Think about that.
I mean, I'm going on YouTube tonight, and I know what I'm doing the rest of the night. So that's what I'm doing. But yeah, with this market today, we have some bad stuff happening in the banks, like you had said. We had a Supreme Court justice die. We have political divide. We have, the coronavirus. We still aren't too friendly with China right now in the trade world. And we have the whole TikTok thing going on right now. So with all those things, the surprising thing that I'm seeing is that the market is still positive for the year. Not much, but it is still positive on the year. So we did dip, at least on SPY, we did go negative on the year briefly earlier today. And so I actually had to get out of one of my trades because of my rules. We're up about maybe 16, 17 points right now as I'm looking at this on the S&P 500 on the year. So we're there, but we're basically right back where we started. But with all those things going on, I think it is very surprising that the market can still stay positive for the year with everything. Financials are getting hammered right now. Looking at XLF, the financial ETF, that's down almost a dollar right now. It was at 20. It was well into the 24s. It's now 23.62. So that's one of the big things that is driving this market down at this point in time. Apple's actually up on the day right now. So it's not everything that's happening. It's more of it's not necessarily technology pulling back. It is more along the lines of the financials, along with other things that are happening to the market at this stage in time. Now, what we're going to have to be watching in the coming weeks is going to be a few things. The debates, if Biden decides to debate Trump, if that's going to happen, we're going to have to be watching that. We're going to have to be watching how different things will go through. The Big Ten is playing football right now, so that does tell me that we are looking to try and go on as a society, even though it is going to be very different, of course, but we are trying to go on, so we're not totally locked down like we were last March. So we're making efforts. The other thing that we're going to need to watch is as the weather gets colder, what are restaurants going to do? Because we're not going to have a cure for COVID in the next couple of weeks. And it's going to start getting cold here in the Chicago area, along with other parts of the country. And we can't rely on just having people eat in the parking lots for restaurants like they have been over the summer. So that's the other thing that we're going to have to be watching. So I think there's not necessarily a lot of bad on the horizon, but there's definitely a lot of uncertainty on the horizon. And right now, we're back to where we started on the year for the most part with the S&P 500. And so we're going to have to keep a close eye on it to see if we can stay positive, go negative, whatever the case may be. And, you had mentioned weekend risk. I'm actually kind of excited about the strategy block because I did a weekend risk strategy over this past weekend and talk about a little bit more of the strategy block today. And that is what I have for what I'm seeing right now, Mark.
Look at you taking advantage of current events for a very timely strategy block. It's almost as if you're the person who won our thematic guessing game, sir. That's the kind of thinking I expect from a person who could pull Airwolf out of their back pocket like that. Now let's turn the tables to someone who couldn't possibly do that because he missed the entire decade of the 80s, apparently. He is the rockingest of lobsters, Mr. Andrew GIOVINAZZI. Mr. Rock Lobster, sir. We know you weren't watching any cool shows during the 80s, so clearly you were glued to let's say, probably the OEX back then, because that would become the precursor to what was now VIX today in terms of the volatility index. So is that what you were doing in the 80s? Instead of watching Airwolf, you were watching OEX tick, sir?
Yeah. Well, let's see. I'm trying to think of the 80s. Okay, so I was in high school, and then I went to college. And in college, I didn't watch a lot of TV. So there's just other things to do. So I've never actually been a big TV watcher, to be honest. Who was the star of Airwolf? Who was the actor that drove the helicopter?
This is the deep pull. Jan Michael Vincent. He did pretty much one show and one show only before he completely imploded into all sorts of disaster. But for that one show, he was glorious, sir.
Hey, well, you know what? When you got the three names, Jan Michael Vincent, that's quite.
And you know what his character's name was for this helicopter, that attack helicopter that flew out of a volcano? His character's name, Stringfellow Hawk. Just ruminate over that.
Stringfellow.
Is that not an 80s show name if ever there was one?
Wow. You're right. It did have it all. It had like the secret volcano. Oh my gosh!
It had it all, and then some.
It's just a grand thing. Interesting. What do we have now today? So from what I can tell, the SPX is lower than it was when we had that kind of QQQ apocalypse, I think, not very long ago. So I'm looking at that. So it almost is like today is sort of like a little bit of a Groundhog Day, because we had everything that is COVID related is up today. Like Peloton, that's a good one to watch if you're trying to see which way the wind is blowing. Snap, Square. Let's take another look. Even Walmart, actually, which did better during the pandemic, is up a little bit. Zoom is up a bunch. It was just below. I think it was just trading 360 not very long ago. It's back to 460. Of course, Tesla, because it's Tesla. Roku up a bunch. I think it's close to an all-time high if we're not there. So you have Netflix, and then, of course, NVIDIA, because it's NVIDIA. So so when you look at this, you go, okay, you have all of the COVID stocks up. And I think the news out of Europe is, I guess they're not the only one having a hard time, because they're like struggling with lockdowns and everything else. And I guess the CDC put something up on our website, then took it down again, their own website, and took it down. So I don't know. And then you have Sweden, apparently, that still people are going to restaurants and they're doing, but they're not. So people are dying from it, but they're kind of going on because they just figure, everybody's going to need to take care of themselves. There's so many currents. And then, of course, in Asia, it's not a problem, apparently. So it's kind of odd, actually. So where, what, how, or who did a better job, or where is it worse? Like, so is it worse in France than the U.S., or why are they having more of a problem than we are? Like a lot of just odd currents on this. So when you have the news, it's bad. And of course, oil and commodities are getting smoked today. So it's another thing, like I just keep watching. I was like, okay, yeah, oil stocks can keep going lower. And eventually I'll buy some more. But right now I'm not doing anything because they keep going lower. I just wait another day and they're lower. So you have that part going around, which is like no oil demand. Airlines, Boeing are weak again. All of that stuff is, bad forward outlook. It's also the stuff that can change if we have, if the vaccine talks get better. But there was like talk of vaccines and fast trials a couple of weeks ago, and things looked a little better, and everything has just gotten sad from there. And I think at this point, if you look at how vol is trading, all of the what I would call very expensive, or most of the expensive future premium has kind of been absorbed. So we're up to about $3 in the October cycle. And like I said, like when we were talking about how vol is going to work, the futures, probably as you get closer to the election cycle vol, that cash future and the VIX cash will probably just, get together. Most of the time when you have a contango structure, the back month vol stays high, and then all the shorter term vol just kind of dies if nothing's moving. Now we don't have that because the market's moving quite a bit. It's definitely over 2% today with a wider range. So vol looks fairly priced, just at a higher level. That's what the market that we have. So if you're waiting for vol to collapse, I think you're waiting for a while. The recent low is about 25. It wouldn't surprise me if we saw a number like that again between now and on the end of the October cycle. I would not hold out for a whole lot lower than that, just because of the continued amount of uncertainty. So, but you did have a cash move. It was actually over 30. And then probably people that are trading VXX are like, oh yeah, vol's really ramping up. And VXX is up $1.11 today. It was up, I think, a little over $2 at one point, over 10% this morning. And then the vol came off. So normally, if you're a vol watcher or market watcher, I would say when you have a spike in vol in the morning and it's not sustained, usually the sell-off in the underlying, like an SPY, SPX, generally do not hold up. Because that bid for vol, when it dies, usually the sellers in the market tend to go away. And I don't know if the dog is wagging the tail or vice versa, but at least for today, just the bid for vol is kind of going away. It would not surprise me to see VXX close to unchanged on the day if this is what we got, because if the market does settle back only down, let's say 1.5%. That's a little less than a 32 VIX, and we're kind of there anyway. So again, since we're already pricing this more expensive vol, I would see this as more a good opportunity to get out of some of the long vol you have, or maybe get out of some of the SPY puts or calendars or something that you have, just because there's a bid for it right now. And you don't know how long this will last. But that's what we got. So it's, again, more headlines. Like, the market does not like the more COVID headlines. It's like fatigue with this stuff, but it's still here and it's not going away. So until they figure out a way to deal with it, or for us to get the case count down, even though the mortality is much better than it was, I would say 4 months ago, when the doctors kind of were just figuring it out. I think they're doing a better job with it now. But we certainly haven't come to the place where we can continue to operate without any, basically with all the social distancing measures and all that stuff. It's like, it feels like it's not going to go away by December of this year. It's going to be with us for a little while longer until it's not. So, and then we have the election, and the Supreme Court justice died, and just add more stuff to the to the pile.
Yes, the ongoing dumpster fire that is 2020 continues. Speaking of fires, actually, before I get to some other breakdowns here, I do believe the meatball is moving soon down to Texas. If he isn't in the process already. A lot of listeners have been sharing interesting weather updates about all things Texas, including today, where apparently 2 national disasters are converging right around Austin. We have the smoke from the wildfires swooping down now into Texas, and also there's this third tropical storm hitting Texas just this year, Tropical Storm Beta, also rolling in over Austin apparently, and it's sucking in the wildfire smoke, and it's making a giant wildfire smoke hurricane going through Texas. So good luck to the meatball in his new digs down there in Austin. One thing about Chicago, yeah, it gets cold here, but we don't have wildfire fueled hurricanes floating around out here. What we do have, though, is a wee bit of trading activity, though perhaps not as much as you might assume, given everything the Rock Lobster and Uncle Mike just broke down here. VIX coming into, as of a few minutes ago, actually, just a tick under 250,000 contracts. That's actually pretty light, even though the ADV is also ticked down a little bit as well. It was over 400K. Now it's back down below it just a little bit, 397,000 contracts. So despite all the things going on out there, what Rock Lobster just broke down over there, VIX can't really find a footing on the volume front out there. SPY is the other side of this coin, though. SPY can find some volume to the tune of about 3.75 million contracts as of just a few minutes ago. That puts it within spitting distance of its ADV already. The ADV is 4.33 million contracts. So SPY pretty much on fire. The S following suit in its limited capacity these days at about 870,000 contracts. The ADV is now a wee bit shy, or I should say a wee bit north of a million, about 1.17 million. So it's creeping back up there slowly but surely. The Q's 820,000 contracts, the ADV 1.5 million. So the Q's actually relaxing a little bit, which is probably not surprising given the fact that the broad index is kind of relaxing. It's not leading the dance to the dark side this time. And the small caps, Russell 2000, are leading a dance in terms of volume. 480,000 contracts already on the tape. The ADV out there is 433,000. Small caps are leading the dance today, though, off nearly 4%, 3.95% right now. So that's a lot to unpack. Small caps, we've been talking about this on Twitter for a while now. It's kind of the secret out there lurking in this 2020 market. Everyone talks NASDAQ and S&P, and rightfully so. But small caps kind of have their own thing going on out there, and it's been fascinating to watch. If you like a vol index, listeners, you like a product that has a little bit of vol to it, you can do a lot worse than checking out small caps and our old friend RVX out there. Hopefully, sometime in the near future, we'll see RVX make a return to the tradable product front. If 2020 doesn't do it, if 2020 doesn't get SIBO to say, hey, maybe we should relist RVX, and I don't know what the heck it's going to take, because there's a lot of vol to be found out there in all things small cap. All right, let's move on out to what's going to be found in our top 10 out there, most active options today. Cost you $190,000 to break into the top 10, so that's pretty decent paper. That gets us to our old friend Roku out here. I haven't seen Roku in the top 10. Remember, for a while there was a perennial top 10er, and then the pandemic hit, and it seemed like Roku kind of got forced out by a bunch of other names, but making its presence felt again in the top 10 at $190,000. Then we go all the way. We're already over 200K by number 9, listeners. That's American Airlines at $204,000. Number 8, NEO out there on the Chinese electric car front, $220,000. I got a feeling electric car is going to be a bit of a theme today. Then we got number 7, GE. Again, GE back in the top 10 as well after a bit of a hiatus, $223,000. That's actually tied with number 6, Bank of America, also $223,000. Number 5, good old Softy. A lot more scuttlebutt coming out about what the heck happened with that TikTok deal. Were they told that they wouldn't approve a Microsoft bid, so they gave the deal instead to a Trump supporter in Larry Ellison and Oracle? A lot of skullduggery sounds like going on behind the scenes on that deal. So maybe some of that contributing to the, also I think Microsoft buying Bethesda today, I do believe, in ZeniMax. So making more inroads into the game publishing out there. So interesting stuff. About 250,000 contracts, 254,000 on the tape as of a few minutes ago. Number 4, AMD, another perennial top 10. It's like kind of the return of the top 10ers, return of the all-stars out here today. AMD, 267,000 contracts on the tape. Number 3, Nikola. You know what's going on out there. CEO steps down after a short selling report sparks an SEC investigation. He says, oh, there's no wrongdoing. I'm just going to step down to fight this, which is, if there's no wrongdoing, why do you step down? Very rarely do you see a short seller's report. These things hit all the time. Do you see them have such an immediate effect, which is kind of striking. And Nikola responding here with some options paper to the tune of 334,000 contract. Worth noting, I don't think they've even produced a single truck yet. So maybe that report had a little bit more meat than they were willing to let on of the company. Tesla, number 2, a paltry, a mere 683,000 contracts. That's a rounding error for Tesla these days. Number 1 with the bullet, as Uncle Mike pointed out, our old friend, the fruit company. Apparently people like the notion of the plastic band Apple Watch because they're doing 1.5 million contracts as of a few minutes ago. Let's look really quickly to see if there's any lurking biases. And actually, a lot of our paper today is pretty egalitarian. Microsoft, 56% calls, 44% puts. Don't see that kind of thing too often. Actually, I've joked before, we very rarely, if ever, see put-dominated paper in the top 10. We have 2 of those today, listeners. We have American Airlines with 60% of their paper coming on the put side of the ledger. And you probably can guess the other one, Nikola. 66% of that 334,000 contracts coming on the dark side there. So that's a very rare thing out there where we're seeing pretty much all put paper in those 2 big net. It's hard pressed to find one usually on the top 10, let alone 2. So that's kind of interesting. And you know what else? We'll get to the earnings in a little bit. We got to keep on rolling now. It is time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild, we get even wilder than Uncle Mike guy pulling Airwolf out of his back pocket over there. Let's see who our Eye of Sauron found for us today. Oh, this is one we haven't talked about in quite some time here on the Odd Block. This is Six Flags, ticker symbol appropriately enough, Six. They of the theme park fame out there. Trading today, $22.28, off about $1.50 or over 6%, about 6.5%. So not a good day for Six Flags. If you know what they do, you can probably guess it hasn't been the best year for them either. A year ago, Six Flags was trading well north of where it is right now, about 50, almost 52, 51.60 out there. And they kind of lurked, and they started selling off in phases, actually, towards the end of last year. I know they've had some financial problems out there as well. They got down to about 42 and change in November. Then they sold off again in January down to 35.5. So this graph looks like a series of steers going down here. And then if they kind of hovered at that level for a while, then we know what happened in February, listeners. It was at about $39 in February, and then the bottom fell out, got down to $8.75. Of course, hard to operate a theme park business when no one can go outside or do anything and no one wants to congregate in large crowds or really touch anything. And those are all kind of central to the theme park experience. So they kind of languished there for a while. Then they had a brief rally there up to about 27 and change in May. This is one of the few names. Actually, I take it back. It did hover at that level again at June 8th. So it did top out around June 8th, around 27 and change again. And then it kind of sold off down to about 16 and change in August. And it's kind of been slowly making its way back. Hit about 25 and change as of September 16th. And then now it looks like the worm has turned again. I'm not sure what the most recent news is. I'm a Six Flags pass holder. I haven't heard anything about what's going on with all that stuff over there. So I know I certainly haven't been there this year, and that's usually one we would usually hit during the summertime here in Chicago. So interesting things afoot. Let's see what our Eye of Sauron found. This actually is interesting. Mr. Rocklops, you don't see these too often for these kind of prints, but it has the width, dare I say, the air of a collar about it, Mr. Rock Lobster. First off, our Eye of Sauron found 6,902 of the OCK 25 calls for 55 cents, going up on the bid. These are 55 cents at 85 over there on the ARCA on NYSE. And that seemed kind of interesting. That was like, okay, looks like an overwrite in Six Flags, but we had a chance to dig a little bit into this one because it seemed like there might be other paper. Sometimes you just get that sense, the spidey sense tells you maybe there's something else afoot with this. So we dug a little bit more and found at pretty much the same time, about 3 minutes earlier, which in a name that doesn't do any paper, might as well be at the same time. We saw pretty much the exact same number, 7,000 even this time, of the October 20 puts also going up, this time for 80 cents, pretty much right off their bid. They were 50 cents at 85 out there. That one on the Philly. So different exchanges doing different legs, which is kind of interesting. And they also, that leg was marked as spread, but the other part of this was not, but it has the width. Around the same time, Mr. Rock Lobster, I put less and less stock these days into these trade tags because they can be gamed in a number of different ways, including the fact that they put them up late, which the calls were, which is probably why they wouldn't put up next to this spread. They seem to be conspiring to try to confound us here on the Odd Block, Mr. Rock Lobster. But you put these two pieces together, similar time frames, almost the exact same size, same tenor, and a name that doesn't do a lot of paper. If it looks like a duck, it quacks like a duck. It has the air of a collar about it, Mr. Rock Lobster. Someone perhaps a little bit concerned about downside below the 20 handle and willing to give up upside beyond 25, and they're willing to pay about 25 cents for it. Is that your takeaway as well, Mr. Rock Lobster? Or are you going to be diehard New England contrarian again, sir?
I sometimes I think I although I was born on the East Coast, I didn't come back to it until I was, in my 40s or something. But I left when I was 1. So I think there is that East Coaster is still sort of in there somewhere.
You'll always be an old school New Englander to me, even though I spent clearly many more years in New England than you have.
So this has, let me see, Six Flags. COVID sensitive stock? I think so.
Just maybe.
It just maybe. Is it going to get off the mat anytime soon? I mean, eventually. I think a lot of these stocks. This is the game. You have to play with them, right? Okay, it ain't worth anything now, but is it going to be worth something later? And I think most long-term investing, that's what you do. You eventually think we'll get out of it, and hopefully Six Flags will be around and get some government and get another bailout. Who knows? Because everybody needs their roller coasters. But this has all the look and whiff of a collar. And I think that's not because the good thing about a collar with stock is just a long call spread synthetically, but it does allow you to trade something. So you have your collar, stock goes down, you close your collar for money, right? Then you reopen another one, but you really don't get rid of the stock. So you're trying to keep the stock position and, taking profits in the collar. So, given what we got going on, it's not a terrible strategy, I would say.
Yeah, I was thinking the same thing. I'm not mad at this one. And you're right. It allows you to, in the rock lobster parlance, do stuff around that stock, which I know is your favorite thing to do out there. So, yeah, this is, sometimes take a dimmer view of doing collars all in the same month. People try to fight to make these things zero cost, and they end up picking strikes that aren't optimal. This guy didn't do that. He paid up for it a little bit, kept it all in October. It's kind of near dated, which is kind of interesting on this one. It isn't that far out. This guy has concerns. They clearly don't extend beyond October, or he's obviously going to be willing to roll or do something else. But still, it's hard to fault what we've seen with this name and what's going on out there. Hard to fault this guy for wanting to collar for it. And he got it off at a decent level, 25 cents. I don't think anyone's going to argue with dumping that upside at 25. Doesn't seem like it's going to hit those highs again anytime soon. So an interesting collar out there in Six Flags. Do you agree, disagree, listeners? Think it's not a collar? Think it's something else? Hit us up. Let us know as we move on into our next name. I do believe this is a newcomer to the space. This is Global Payments Inc., ticker symbol GPN. This is a financial services company that provides payments out of Atlanta. Go figure. They are part of the S&P, by the way. And let's see, they're trading right now 175.71, off nearly $4, about 370, so a little over 2% out there. This is an interesting chart for this one as well. It was kind of on a nice run up going into the sell-off. A year ago, it was trading 159.66, so lower than it is right now. Rallied all the way up into early February at 208. It actually hit 209.62 ever so briefly there. And then we all know what happened after February 20th. Also, coincidentally, the last day VVIX was below 100 until this Friday. And they got down to 105.54, so it pretty much got cut in half over the course of a couple of weeks out there. Then it rebounded and it sold off, rebounded and sold off. And then it rallied again. Just take a guess. I dare you, listeners, when this name topped out. Oh, did you say June 8th? You are a remarkably astute audience out there. June 8th, 189.78. And then it has not looked back since. Someone should really discuss this more, this mini apex for the market out. Everyone talks about tech names and tech rec and all this. But June 8th was clearly a very important day that a lot of names have been struggling to come back to and have not had a chance to make it. And now we find ourselves at 175.71, off over 2% today out there. So not a good name, or I should say not a good day here for Global Payments. Let's see what our Eye of Sauron found out here. Well, given today's sell-off, maybe it's not surprising that we're seeing action on the put side of the ledger. It was in October yet again, so near-dated puts, Mr. Rock Lobster. The OC, let's see, 160 puts going up 6,075 times for $1.95, kind of mid-market, leaning towards the offer, I suppose. This market was pretty atrocious. You could drive multiple Nikola trucks through them if they ever were to make one. 80 cents at $2.75 out there. So $1.95 is where these puts went up. Let's see, the market was for 17 at 65. So even at that atrociously wide market, they would only offer 17 by 65. So yeah, to say the liquidity infrastructure is a little bit stretched at the moment, probably underselling it out here. But the 160 level is an interesting one. That's pretty much, they hit that pretty recently on July 13th. And then looks like they threatened it again. They got on September 11th, they got down to 166. So they have tested that low a few times of late post-pandemic. Obviously, they were well below that in the immediate blush after the pandemic. So it's an interesting strike if they were to buy it for hedging. Also an interesting strike if they were to perhaps draw a line in the sand. I know you like yourself a little line in the sand put, Mr. Rock Lobster. So I have an idea maybe where I think you're going on this one, but what is your take on these funky quasi mid-market out of the money puts here in Global Payments Inc., sir?
This is a very interesting one. 160 feels a little tight for a line in the sand. I mean, it looks like a level that's sort of, except for like the bad month of April, we'll call it, or the bad month of March. It's it looks like a good place to like purchase protection. I think like a mid-market put like that, I would assume that paper sold it just because of the pricing. Like, I don't know if a liquidity provider would sell that strike like that. But let's see, you got earnings. It's kind of before earnings. Maybe there's an earnings change. It just has the whiff and feel of somebody selling the puts, and there's a 185 bid to buy them back and a 225 offer too. So it has that, it has that flavor. It has the kind of the sell to put flavor. Although it's a little bit more aggressive than your average line in the sand put, but still, it's 10% down to pay. But there's really no real vol to speak of, so it's hard for me to believe that they actually took that liquidity out. So I still think the customer sold them. That's kind of the bottom line there.
Yeah, I'm trying to dig in and see if I can find what happened on the IV on that strike. It's a little bit buried in here. Maybe I'll get to that while Uncle Mike is analyzing some fun strategy. But before we get to that, we got one more to parse. Mr. Rock Lobster, you asked ever so nicely the other day, and by nicely I mean with great umbrage, to review some of your recent line in the sand. We've analyzed here on the old Odd Block some of your line in the sand put analysis. So we're going to go back in the Wayback Machine, all the way back to July 30th. Oh, the heady days of summer, where we talked about a line in the sand put in Equitable Holdings, ticker symbol EQH. Let's see, at the time we profiled 4,500 of the AUG 17.5 puts going up for 22 cents out here, 4,500 times. There were earnings coming up. Let's see, this went up on July 30th. There were earnings on the 4th, so it seemed like someone perhaps harvesting a little bit of the old earnings risk premium as well. This was July 30th. Let's see, the stock on the day of the trade was 1993 at the time this trade went up. So had a wee bit of wriggle room to the dark side there. And lo and behold, by the end of the month, where was the stock? 21.44. It never really threatened that strike, listeners. So looks like our friend kept all of his 22 cents, didn't bother to close them out. They were still open at expiration. Another sign that he probably wrote these bad boys here. It looks like, Mr. Rock Lobster, we're 2 for 2 here on our reviewed line in the sand puts. These bad boys seem like they went out worthless, and our friend kept a cool, $99,000. Is that your takeaway as well, sir?
Well, that $100,000 is kind of the magic. It's sort of.
What did you call that? Girlfriend Ferrari money? That's what you called it last year?
It's Ferrari for your girlfriend money. I don't know where I keep coming up with that, but it seems to be the right now. I'm looking at the although the global payments puts above are substantially more than that, almost $2 a contract, 6,000 times. So that's a little bit bigger chunk of change. That's Ferrari for themselves, I think, at least one of the new, really cool new ones. So, I think the line of the sand put sellers, as they normally wait for really a good opportunity and a decent price, and they're looking for just some kind of yield to hold for the month. So I think they're paying. So again, line of the sand still producing some. Let's just call them. I almost think of these as like a dividend play if you want to own the equity. If you're an investor and you think of stuff like that, where listen, I just want a 22-cent dividend to hold this underlying. And if it so happens I take delivery, I'm going to get delivery, 10, 15, 20% below the current price. So if you think about it like that, it's much easier to be an investor like that. I think that's more along the lines of the TOSAW kind of concept on, getting paid, to wait. And that's kind of what you're looking for, I think.
All right, and you know what our listeners are looking for? It is Monday. It means they want a little bit of Uncle Mike in their lives. So without further ado, it's time for a little bit of the old strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, Mr. Uncle Mike, I believe you alluded to it at the top of the show. You said you have some fun weekend risk-type trading in store for us. So without further ado, sir, have at it. What is up in your strategy block for today?
Okay, I've said on this show many times, I hate weekends just because you have no control. Even if you are trading futures, futures don't trade on Saturdays. So yes, you can do something on a Sunday night, but gaps can kill you. I hate gaps. Gaps are a horrible thing. So you have to always be prepared for them and you have to plan for them. So what I did this past weekend is I was short a put spread going into the weekend, and I wasn't predicting this downturn over the weekend by any means, but I was scared to death, as I typically am going into most weekends. And so what I decided to do this weekend was I had a put spread, and I can't say the exact strikes due to compliance, but I had a put spread that I was selling out of the money, and it was pretty decent amount out of the money, but stuff can happen on weekends. And so what I decided to do this weekend is I took a half position. It was the put spread expired 2 weeks from last Friday. I took a half position on a long put spread, same strikes, that expired today. And so with that, what ended up happening...
Oh, you let this hang in there, Uncle Mike. What ended up happening?
It all happened, and then I watched Airwolf. No. But what happened is the beneficial thing to what I did was that if we have another weekend, we didn't, but if we had another weekend like one we had last March, I could sleep at night. And so I personally like sleeping at night. It makes me a better trader. It makes me a better financial advisor. It makes me a better human being. So what happened is the markets did, of course, gap down, and I got out of that long put spread for a small profit. So as they went down, what ended up going on was I got out of the long put spread, and now I'm in cash at this stage. Just as a method of risk management, I may get back in at the end of the day. I haven't made a decision yet. But what I was able to do is I paid just a couple pennies for this garbage put spread that expired today. And by doing that, it took a little bit off of the premium I collected. But let's say that we would have gone down way more significant than we did. I made a few pennies on this trade, which is fine. It's better than losing money on it. But I had the protection in place to where for a couple pennies, I took away weekend risk. And if we would have opened just somewhat down or just a little bit down, and I could have just only lost a penny or two over the weekend, that is well worth it to me. Now, I ended up making more on it. And of course, it's a hedge, so I ultimately was down on the trade. But the point is that weekend risk is very real, especially in markets like this. And so you have to prepare for what could happen over a weekend where you have no control. So what I did this past weekend is I bought a garbage out of the money put spread, and that actually mitigated a decent portion of the risk on my typical long put spread. And does that mean it's something you should do all the time? No. But what it does do is it's a way to get some pretty inexpensive sleep. And if we were to go down further, then it really would not have hurt me overall had we gone down another 100 points in the S&P. And so something to think about over the weekend. Those garbage puts might be worth something to somebody.
There you go. Garbage puts, your weekend risk trade extraordinaire. As we head on into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we break down what the heck is coming up on our trading screens for the rest of the week. And there actually are some earnings popping off this week, so if you need a little bit of just some micro focus on some single names in your life right now, you can't handle all the macro, I got you. We're with you here. We got you covered here. Let's kick it off. You have, of course, the earnings move results, earnings season reports. All of those can be found completely for free. TheOptionsInsider.com, including this latest one with some reports coming up for this week, including some names you may have heard of, like Nike and the Meatball's favorite, Darden Restaurants, or Rite Aid, a.k.a. RAD. I love that ticker. And Costco out there. Let's break down a few of these. Nike, first up, they're popping off tomorrow after the bell. At the time of this report, they were trading 114.66. They were pricing in $6.82. In the past, they've moved $5.09. So looks like a little bit juicy on the vol front, which, again, if you've been paying attention, you know, hasn't worked out so well this season. Let's go back. Darden Restaurants, they're on the 24th before the bell. They're trading about $90 even. They were pricing in $6.07. In the past, they've moved $6.83. So a little light. Probably makes sense given what we're seeing out there. Rite Aid, a.k.a. RAD, a whopping $13.44 out there. So a little light on the Rite Aid front. They're pricing in $2.02. In the past, they've moved $1.69. So a little bit extra juice in the Rite Aid camp this cycle. And last but not least, Costco, a lofty $335.96 as of this report. They're pricing in just a little bit shy of $15, $14.94. In the past, they moved, get this, $9.88. So some folks are expecting a wee bit of movement, a wee bit of juice out here in Costco. They are reporting on the 24th after the bell. That's just a handful of names we have out here. We have a bunch of reports here for this week, for previous weeks. We have the results reports as well. We have the season, all that good stuff you guys can find completely for free. TheOptionsInsider.com. But now let's go around the horn and see what everyone else is watching until we can gather here, at least for this program. We'll, of course, be on throughout the week on the network listeners. But for these two schmoes, get them back here on Thursday. Before we do that, let's see what they're watching. Mr. Rock Lobster, we'll start with you. What are you watching for the rest of the week until we can gather back here on Thursday?
Again, just vol, COVID, same stuff. Just seeing how everything responds and if this the COVID stock rally can keep up. So as of right now, they're all looking pretty solid. Apple's is wavering a little bit. We'll see, but you know, as of right now, that and to see what the actual results are, because again, I think there's a lot more cases. They're testing more and more cases, but the death part doesn't seem to be as bad. So what, you know, the market used to care about that. We'll see what happens next.
We will see what happens next, indeed. Mr. Uncle Mike, same question for you, sir. While you're not out there slinging the weekend risk, what is on your radar until this Thursday, sir?
Just watching to see if we can hold the open for the year on the S&P 500. I think that's a major thing, as I talked about on the show a lot this year, quite frankly. And watching, everything else, Supreme Court justice nominees, watching the Republicans and Democrats complain about how, we should wait till the election. Oh, no, we didn't do it way last time. Watching all the political banter and watching pretty much everything.
Including, perhaps, a few episodes of our beloved Airwolf in between. Of course, that music, listeners, means we come to the end, at least of this show. But don't worry, there's more coming up later here. Just today on the network, got the Crypto Rundown. Tomorrow, of course, Interview Tuesday. Back on the docket, Education Wednesday. Got Boot Camp, OPR, all the way through to Thursday with Twifo and the old OB again, kicking off again on the end of the week. On Friday, more fun stuff sprinkled in throughout there as well. So a lot of fun stuff to stay tuned and stay glued to throughout the week. But before we go, let's go back around the horn the way we just came. Let's start with Uncle Mike, sir. Folks are intrigued. They want to learn more. Maybe they want to call you up, talk about weekend risk. Where should they go? What should they do?
stcharleswealth.com. Feel free to contact me at any time. I'll be more than happy to tell people what I'm doing right now to protect against downside risk.
There you go. Find out what he's doing to protect against downside risk over there at stcharleswealth.com. And the rockingest of lobsters, Mr. Andrew GIOVINAZZI, when you're not out there missing all the television that was the 80s. If folks want to reach out to you and talk a little bit of vol, where should they go? What should they do?
Optionpit.com. Go to the memberships page. You can see all of our vol trading club, trading legion, learn how to trade kind of this long gamma stuff. Sharp bets for more directional trades, and then the vol edge is a vol direction. So there's, you can subscribe to Trading Ideas. They're all doing pretty good this year. You can also get education, join our pro chat room, all that kind of stuff. So you just come on by and let us know what you'd like to do.
Let them know what you like to do. Of course, the place you do that, optionpit.com. is the place to go. On behalf of the rockingest of lobsters and the uncleest of Mikes, I do. Someone write in and said he says that now as well. So I'm sorry for impacting your vernacular out there, listeners, and indeed myself. I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. We'll get to a bunch of you on Thursday. Don't you worry. And we'll see you back here throughout the week on the network. Remember, if you like what you hear on the network, keep those reviews coming. It's more important than ever for new folks to continue to discover the network in these crazy times. And we'll see you back here throughout the week, including crypto in a little bit, and right back again on Thursday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.